Brent crude hit $85.28 this morning, then got rejected like a bad trade idea. Now it's sitting at $84.69, and most traders are chasing the breakout. That is exactly the wrong move. There is one danger zone and one hidden opportunity right now. I will show you both. Stay to the end. I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything. If you are long oil right now without a plan, you are gambling on geopolitics. And geopolitics does not care about your stop loss. Let us declare the session bias immediately. Brent crude is range-bound with a strong bullish bias on the daily and 4H timeframes, but the weekly and 1H trends are neutral. Translation: we are in a trending range, a market that wants to go higher but needs a catalyst to break through overhead resistance. The single invalidation level that flips the entire structure is $83.33. Write that number down. If we break below $83.33 today, the entire bullish structure resets and we are looking at a retest of $81.71. Here is where the herd is positioned. Retail traders are overwhelmingly long after the 15% rally this month. They are chasing momentum right into the daily 50 EMA resistance zone around $85.50. That is a classic liquidity trap setup. The smart money is waiting for a stop hunt below $84 before reloading longs. Let us walk through the chart from the top down. On the weekly time frame, Brent is neutral after that massive V-shaped recovery from $70. The weekly close above $82.50 is constructive, but we need to see follow-through. On the daily chart, the trend is strong buy. ADX is at 47.93, which tells us the trend is firmly established. RSI sits at 57.46, comfortable, not overbought. The daily candle from yesterday closed at $84.95 before easing to $84.69 today. Price is now trading above the MA5 at $82.76, the MA10 at $80.22, and the MA20 at $80.10. But here is the critical detail. Price is below the MA50 at $85.29 and the MA100 at $86.11. The 50-day moving average is the line in the sand. Here on screen text, MA50 equals 85.29, the line in the sand. On the 4H timeframe, strong buy momentum persists, but the 1H trend has turned neutral. That is your divergence trap. The shorter timeframe is losing steam while the daily timeframe is still bullish. Most traders look at the daily and buy. Smart traders wait for the 1H to confirm. Let us talk about the hidden divergence. MACD on the daily is still negative at -1.4, even though price has rallied from $70 to $84.69. That is a bearish divergence that most retail traders will completely miss. Price is making higher highs, but momentum is making lower highs. This does not mean the trend is over. It means we need a catalyst to break through that divergence. Here is what most traders miss. CCI is at 138.36, which is above the plus 100 overbought threshold. Williams %R is at -16.43, also in overbought territory. These are not sell signals on their own, but they tell you that any upside from here needs fresh news to sustain it. Just this morning, Reuters reported that Iran asked Yemen's Houthis to stand ready to close the Red Sea oil route through Bab el-Mandeb. That is a fresh geopolitical escalation that the market has not fully priced in. If the Red Sea closes alongside Hormuz, we are looking at a supply shock that could send Brent to $90–$95 to key support levels. S1 at $83.33, S2 at $81.71, S3 at $80.10. Key resistance: R1 at $86.56, R2 at $88.17, R3 at $89.79. The pivot point is $84.94, and we are trading just below it. Let us connect the last 24 hours of news directly to price action. The U.S. struck Iran's coastal defense systems and missile facilities on Wednesday after reinstating a naval blockade. Iran responded with strikes on Bahrain, Jordan, Kuwait, and Oman, and declared it has closed the Strait of Hormuz. That is the bull case. Here is the bear case. The International Energy Agency's latest monthly oil market report projects global demand will contract by approximately 1.1 million barrels per day in 2026. U.S. refinery margins hit new records as fuel shortage concerns grow, but distillate inventories unexpectedly increased by 4.6 million barrels last week. That is a demand red flag. The narrative web is clear. We have a geopolitical bid from Hormuz and el-Mandeb risks, clashing with a demand destruction story from the IEA and JPMorgan. JPMorgan now projects Brent averaging $86 in Q3 and $80 in Q4, exiting 2026 at $78. Goldman Sachs says Brent could hit $110 if disruptions persist, but could retreat to $60 if tensions subside. That is a massive range. The market is pricing in a binary outcome. The 1 to 2 week directional lean is bullish as long as geopolitical tensions persist, but the risk of a sharp pullback on any ceasefire headlines is extreme. The event that invalidates the bullish case? A diplomatic breakthrough reopening Hormuz. Watch for any US-Iran negotiation headlines. Do you think Brent hits $90 this week? Comment yes or no. I am tracking consensus. Most people skip this section. That is exactly where the money is made. Keep watching. I am giving you 2 scalping strategies and 1 swing strategy. Every single trade has an exact entry, stop loss, take profit, and invalidation level. Strategy 1. The opening scalp. Scalping. High probability. This is a 5-minute structural trigger right at the key intraday level. Brent has rejected $85.28 twice in the last 24 hours. We are looking for a third tap and a failed breakout, exact trigger condition. Price taps $85.20 to $85.30 and prints a bearish rejection candle on the 5-minute chart, a shooting star, bearish engulfing, or long upper wick. Entry at the close of that candle below $85.00. Stop loss, $85.65, just above the recent swing high and the daily 50 EMA at $85.29. Take profit 1, $84, a 1 minute and 1.5 seconds risk-reward ratio capturing the move back to the pivot point. Take profit 2, $83.33. If momentum extends into the key support level, what instantly voids the scalp? A 5-minute candle closes above $85.30 with strong volume. That signals a true breakout, and we need to re-evaluate the opening SCLP entry, $85, 5M bearish rejection candle after tap of $85.20 to $85.30, stop loss, $85.65. Take profit 1, $84.00. Take profit 2, $83.33. Risk, air reward, 1:1.5R to TP1, 1:2.6R to TP2. Invalidation. Void if 5M candle closes above $85.30 with strong volume. Strategy 2. The liquidity grab. Scalping. Counter noise. This is the counterintuitive play that catches the herd offside. The market rallied 15% in 2 weeks. There is a massive stop cluster below $83.33. Retail traders who bought the breakout have their stops just below support. We are looking for a fake breakout below $83.33 and a snapback confirmation. This is a classic stop hunt pattern. Exact trigger condition. Price breaks below $83.33, triggers the stops, then prints a bullish reversal candle on the 15-minute chart, a hammer, bullish engulfing, or long lower wick, closing back above $83.50. Entry. At the close of the bullish reversal candle above $83.50. Stop loss, $82.85. Just beyond the wick low to give the trade room target, $84.90, the nearest intraday liquidity pool at the pivot point. This is a fast, singular target. Warning. This requires fast execution. If you hesitate, you miss the entry. The liquidity grab entry, $83.50. 15M bullish reversal candle after stop hunt below $83.33, stop loss, $82.85. Take profit 1, $84.90. Risk reward, 1:1.5R. Invalidation. Void if price closes below $82.80 on the 15M. Are you scalping or swinging oil? This week. Comment scalp or swing. I want to see where this community sits. Strategy 3. The session swing, trend alignment. This is the multi-session play based on the daily and 4H bias. The daily trend is strong buy, and the 4H trend is strong buy. The geopolitical backdrop supports higher prices as long as Hormuz tensions persist. Trigger condition: a 4H close above the 60-period moving average on the 4H chart with bullish MACD momentum confirmation. We are also looking for a 4H close above $85.50, which would break the daily 50 EMA resistance entry. At the 4H candle close above $85.50, or on a pullback to $84.50 to $84.70 if the 4H candle holds above the MA60 stop loss, $82.50, placed below the former resistance turn support zone. This is outside the daily structure and gives the swing trade room to breathe. Take profit 1, $87.50, a conservative swing target capturing the move to a 1 to take profit 2, $89.79. The stretch target at a 3 if the geopolitical situation deteriorates further. Risk reward: approximately 1:1.5 R to TP1, 1:3.2 R to TP2. Trailing stop rule: once price reaches halfway to TP1 at $86, move the stop to break even at $85.50. This locks in risk-free trade status. Explicit invalidation: a daily close below $82.50 would shift the medium-term outlook from bullish to neutral and suggest the rebound has failed. The session SRNG entry: $85.50, 4H close above MA60 with bullish MACD. OR pullback to $84.50 – $84.70 stop loss. $82.50 take profit 1. $87.50 take profit 2. $89.79 risk reward: 1:1.5 R to TP1, 1:3.2 R to TP2. Invalidation: void if daily close below $82.50. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. These are fast moves with tight stops. No positions through high-impact news like US CPI or FOMC. Stops are non-negotiable. This is how you survive to trade the next big move. Oil is one of the most volatile assets in the world. Respect the volatility or it will respect your account balance. By emptying it, let us summarize the single most critical level for the next session: $83.33. As long as Brent holds above this level, the bullish structure is intact and we are looking for a retest of $86.56 and potentially $88.17. A break below $83.33 opens the door to $81.71 and $80.10. Watch 83.33. The line between bull and bear. Tomorrow's focus: the Red Sea. Iran has asked Yemen's Houthis to stand ready to close Bab el-Mandeb. If that happens, 2 choke points are under threat simultaneously. If that headline drops, Brent could gap higher overnight. If we get de-escalation news instead, we could see a sharp sell-off back to $80. If this level breaks, the whole monthly trend flips. I will have the updated blueprint 24 hours from now. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. Scalp the noise. Swing the trend. Happy trading.